Hello, everybody, and welcome to our Nurturing Young Leaders webinar series. This is organized by NUS Department of Real Estate, as well as the Institute of Real Estate and Urban Studies in NUS. We would like to thank our supporting organizations, Center for Livable Cities, REDAS, RICS, and ULI for supporting this seminar series. So today we have our esteemed panelists, and we're going to introduce them to you. We have Mr. Getty Goh. He is the co-founder for Co-Assets Limited, and he holds a master's degree in real estate as well as a bachelor's of building from the National University. He founded Co-Assets in 2013, and Co-Assets is listed on the Australia Securities Exchange in 2016. So under Getty, Co-Assets raised close to 200 million Sing dollars in the last 3 years and has grown the platform into a regional financial technology platform. Next, we have Ng Xiaoyong. He's the director of geospatial and data, and he's also the Chief Data Officer at the Singapore Land Authority. Xiaoyong is a friend of the department. He's also a member of the UN Committee of Experts on Global Geospatial Information Management and chairs the National Institutional Arrangement Work Group currently. He's trained as an urban planner, and he started his career at URA. And then he later served at the Ministry of National Development, NND, and Ministry of Law. And Xiaoyong was also our adjunct associate professor years ago. So we know Xiaoyong very well. So next on the panel, we have Tan Kok Kyong. He is currently the Chief Business Officer at CASA Singapore. He has more than 23 years experience in real estate markets across Asia and Australia. And he has worked at URA, Merrill Lynch, Pacific Star, and Orange Tea, co-founded 3 companies, including one in Myanmar. And at present, he is with CASA Singapore and helping to build a token exchange for real estate investments. So welcome, everybody. And we're excited about today's series, which is on FinTech and PropTech. So what is most interesting to us, and one of the burning questions that we have is wanting to know about the trends that we would see in FinTech and PropTech. They are being currently accelerated by COVID. So perhaps we will get Getty to start off with maybe an introduction and also to address this question. Getty, over to you.
First and foremost, thank you NUS for inviting me. So what I'll do right now is I'll just do a quick introduction, and then I will go into the question at hand. Okay, let me just share the screen. Just very quickly, Co-Assets, I think last year we were, this is one of the accolades that we recently got, and I think this was as recent as of this year's ranking. Just to give people a sense of the kind of service or ecosystem that we provide. So Co-Assets is a FinTech company. We service more than 500 registered members in China. In Singapore, we have more than 20,000 registered members. So I think to give you a sense of how, at least for our own funding numbers, these are some of the transaction growth that we have seen on every half year. There is a strong growth in this area. So this is really a new and interesting growth area. The licenses that we have in Singapore, we have a capital market service license. One of our subsidiary also, they have an estate agency license. And in Hong Kong, we actually have a money lending license. So a lot of things that we do are within the license space. And to give you a sense, this is actually in Hong Kong, we have, using technology, we are able to assess deals, and this is an example of the second charge mortgage portfolio that we have in Hong Kong, and on average we have about 20%. In Singapore, in 2018, we also launched a fund back in 2018, and this is just some high-level numbers. We have actually done crowdfunding before, and even in Singapore, this was actually one of the first crowdfunding deals project in Mountbatten Lights. And it was a successful deal that was fully redeemed. Even for financial technology, we also are in the financial technology space. So we also do provide advisory to companies. And this is an example of a NASDAQ company of which we provide financial technology services to. And that's it, past interviews. And yeah, so I'll stop sharing here. And I'll just answer the question by Sky. We think that is a very interesting time. A lot of these transactions are moving online. So I think right now, things like fractional ownership, things like using blockchain, all these are really very appropriate, very timely. And I think moving forward, a lot of these transactions are going to move over the handphone. And we really envisage property buying and selling and fundraising to really be done at the convenience of your handphone. Okay, I think I'll end here, but I will just, say that it is actually a very exciting time for businesses and companies to really be in right now.
Right. Okay. Next we have on in line is Xiaoyong. So Xiaoyong, would you like to share a little bit about yourself and what are your thoughts about FinTech and PropTech trends following COVID?
Hi, good afternoon, everyone. I'm Xiaoyong. I work for the Singapore Land Authority, taking care of the geospatial and data business in Singapore Land Authority. Thanks a lot to my Department of Real Estate friends for inviting me to come and share some thoughts. Although I have been the real estate alumni from the school, I have actually ventured into more urban planning and geospatial. But anyway, I think these three share similarity because it's all about location, 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 and people. So I'm not really sure whether I'm really qualified in a way to come and talk about the impact of COVID-19 on real estate or not. Anyway, I'll make an attempt. I'll probably raise more questions than what I can share. But some of these questions, I will also appreciate our academics, professors, and some of those who are in the room also to share what they think would actually impact on the real estate market. Some simple observations. The first question is, really, is there a shift in demand? Demand for office space, demand for real estate. JLL just published a study. It says that in Singapore, more than 81% of the workforce were actually working from home. It's the highest in the Asia-Pacific region. Australia just about 60%, 67%, India 66%. However, in the same survey, 54% of the Singapore respondents want to go back to the office. The reason being that they want to see their colleagues, maybe their lunch kaki, and then to have more interaction in the office. Among the Singapore respondents, only 43% of the respondents agree that work from home is more efficient. Whereas in India, 80% of the respondents think is efficient. So we are kind of getting some conflicting message. While a lot of people are working from home, yet people want to go back to the office. So that raises one question I'm asking everyone. Has the COVID-19 situation fundamentally changed the human nature or changed our human behavior that could potentially cause a shift in demand, which I will elaborate a little bit more later. Now, in the same survey, it found that millennials, I think basically those who were born in the late 80s to 90s, they formed the largest group of people in Asia Pacific that want to go back to the office rather than work from home. And a CNBC US survey shows that technology companies are ending their leases and they're asking all their employees actually to work from home. And in fact, I think the news just announced that Google allows their employees to work from home or remote working until next summer, which is a year from now. And CBRE in US predicted a 7% drop in the office rental per square foot from first quarter to the fourth quarter. And first quarter 2021, they see that the US office market could see a 15%, 1.5 vacancy rate. So we are getting a bit of mixed signal. Is it one of those kind of a downturn, and then after that we'll see some bouncing back, whether in the office market or in the residential market? Or is it going to fundamentally change the real estate market? The other big observation, and I quote study from South China Morning Post, more on China, but China is probably the biggest internet market. That I think it is really a trailblazer, and we can look towards it as a leader in technology. In China, there are 900 million internet users, and 99% of them are using mobile devices rather than laptops. So they found that pre-COVID, those people who go online spend 5.6 hours, and during COVID, they spend more than 7 hours. In fact, there has been an increase of 300 million work productivity tools used during the COVID. So that's a huge increase, and there's a huge market. And I think no surprising that there's sales online, especially those live sales online, have gained a lot of momentum during the COVID situation, where people even sold a rocket launcher during live streaming. And there was this guy who is very popular in selling all kind of items. I think he's called the king of lipstick. He sold 15,000 lipstick just in 5 minutes. And of course, there has been sales in real estate as well, online. So really, I think this is the trend that we have to watch out for. And you probably have seen the internet meme. The CEO, the CIO just couldn't change the trend of digitalization in the office, but COVID just changed everything. Right. Now, I'm looking at it in a sense more from the urban planning and design perspective. First of all, is that if everybody has to work in office in the long term, or they get accustomed to working in the office, and this situation has generated demand for getting food, getting shops, everything online. I think the question is whether location benefits of a real estate, be it office or residential, is it that important anymore? Do you have to be close by the shopping centers? Do you have to be close by, say, parks? Do you have to be close by the hawker centers if you can get everything online and so efficiently? So that's really something that I'm still thinking of. So when you sell your property, let's say real estate, do you tell your buyers that, hey, good, this house is near this, near that, near good school? The other thinking is in terms of the space and interior design of the housing. Well, I can only say for the case of Singapore. Now, we know that Singapore, our houses are small. A lot of people are working from home. Now, our homes are smaller, and is it a conducive environment to work from home when your husband, your wife, and your kids, and your parents, and plus your folks are all working from home? Is it a conducive environment? If it's not a conducive environment, would there be some demand for larger flats in future, larger apartments in future that cater to this kind of work from home? And could there be some demand in a way for satellite offices kind of thing? A lot of co-working space are happening in the CBD, but will co-working space start to spread, in other parts of our towns? And then whether our local planning regulations would, in a sense, promote it or prohibit it. The other one is really about location information. This is really what I do. We see that during the COVID-19, location and location information become very important. People want to know where they go. The employees want to know where people go. The government wants to know where people are. So there are a lot of tracking app around. And people are also concerned whether they are going to places where they have been sort of visited by COVID-19 cases. And more granular and more detailed location information is required. So for example, if you go to say a certain commercial complex like Jurong Point, and whether you are at level 1, level 2, level 3, today, most location technology can just detect you are essentially at a certain building, but they do not know exactly where you are. So I foresee that a lot of technology revolution is coming in a way to find exactly where you are and who you come to contact with. But that also, in a way, causes the questions of the privacy. And privacy may then, in a sense, become an obstacle to the collection of location information, which is very important in the geospatial market and in also development of the real estate app. I make a small attempt to look at the PropTech and what could be the impact. My thought is that it might actually, in a way, because of the technology adoption acceleration, it might actually, in a way, accelerate the disintermediation of the whole market. So technologies are coming to eat your lunch if you are more of a real estate agent. I think as far as PropTech is concerned, my observations in Singapore, most of the PropTech are focusing on agency business, and perhaps some they are on more property management business. And some of these PropTechs are also going upstream, not just doing agency business, but also sourcing, financing, and with other supplementary services that could supply to the buyers. I think the trend with higher technology adoption, we need to look at this intelligentization, meaning that although human intelligence is important, but a lot of work, especially the KYC part, when you want to know your customers, there could be a lot of ways to use robots in a way to find out the preference of their customers, so that the customers will get whatever they want that fit fully, their need. So these are some of my thoughts that I can share today, and I welcome a good discussion after that. Thank you.
Great, thank you, Xiao Yong. Definitely food for thoughts, and I'm sure these are some of the issues that most of us would have on our mind. And last but not least, and probably most appropriately to be the last person, since Kok Yong has experience in real estate development, equity research, property research, application of blockchain to real estate, and most recently tokenization. Probably you'll be able to share some of your thoughts with the rest of us. Kok Yong, over to you.
Well, just slight disclaimer, all the views expressed are my own, not my current employers. Okay, so I want this to be a meaningful engagement. So if I say anything too directly that offend you, please don't start a Me Too movement against me. All right. Currently, I'm employed by this company called CASA. The goal of the company is to make the world's asset accessible to everyone. If you follow me on LinkedIn, you will unveil what we are doing progressively. But that's not the focus of today's talk. I took the talk to get me a chance to share my thoughts on how I think the real estate market would adopt technology and evolve. Okay, so my attempt to address 3 key questions: why is there a need to change, what is technology, and stages of adoption in property. Okay, so in general, this is what is forcing change upon almost every single industry. Firstly, economic forces are changing. Sharing economy is the norm. Distrust of big corporates is the norm. Socially, people are feeling the need to be empowered and are seeking ways to kick out intermediaries as much as they can. And most important, probably most critical factor that enable this to happen are the evolution of mobile technology, cashless payment, and high-level AI. All this technology enable us to break away from the traditional infrastructure in either physical infrastructure or technology infrastructure that inhibits change. So some of the industry that has changed can be found here. You all probably will know some of it very well. The most recent one is this Robinhood app, which allows a lot of retail investors in US to participate in US equity market, and they have been blamed for the volatility in the market. Okay, and probably one of the most good example of how this change is evolving is recently Alibaba's Ant Financial announced the intent to list with a 200 billion valuation. Okay, what does $200 billion mean? Okay, JP Morgan, as at yesterday, has a market cap of 295 billion. Okay, and how long has JP been in existence? So this compared with how long Ant Financial has been in existence. So this shows you the quantum impact that new players adopting technology can have on the market. Okay, so when you look at technology, I always tell people technology is not to be used just for the sake of it. Pardon me, but there's a lot of talk in the market on classifying things as FinTech, PropTech, CreTech. I would rather focus on the function, not the form, meaning not how people package it. I think the function which technology help to make things faster, better, cheaper is probably more important. Then it relates to the point of, from the business angle, when you want to adopt technology, you need to use the most appropriate cost technology, not necessarily the most advanced, because as a business, you always need to think about how to recover the cost that you spend. If you adopt technology that nobody wants to use, you'll not get paid for it and you'll lose money essentially. Okay, so a very good example is probably, this is my proudest career achievement today. Although this thing is about 20 years old. Okay, I launched this, helped the government launch this in URA in way back. Okay, why I bring this up is at that point in time, in year 2000, okay, we were forced to push government data online. So I'm very glad to say, even 20 years later, a lot of the feature my team put in is still functional, meaning if you look at this thing in the middle is a carousel, which kind of is being used by web to advertise. Secondly, we adopted online registration. It seems very normal now, but at that point in time, people are very questionable on how people would submit their personal detail online. 3 clicks to reach a data, and self-service, meaning we allow people to download. All of these features were unheard of when we launched the service in year 2000. Okay, so the point is that there's always a solution, not necessarily a very complex solution when you look at the business. Again, on cost appropriateness. Okay, so in the real estate space, I think this is how I look at technology being applied in the property market. Okay, the first layer is the discovery function. Okay, what I mean, this is the easiest entry type of technology that a lot of startups try. Basically, you are trying to fulfill the middleman role by helping the middleman. So typical feature is like you allow advertising, you match buyer and seller. It's a passive list. So things like a listing portal, the most famous of which is Property Guru. Okay, of course, Property Guru has been adding new feature, but the essence of it is still being function as a discovery technology to help people discover buyer and seller. via intermediary. Okay, then things have evolved into transactional, meaning through the use of technology, it's enabling middlemen to kind of play a secondary role in matching buyer and seller. So 3 key attributes is that must have in this transactional portal would be, they will tend to offer knowledge. They offer some sort of self-service for either buyer or seller to do some transactions, and some even go to the extent of instant transaction. Okay, a good example recently I saw during the lockdown is that somebody in Australia started this open negotiation, which allow an online auction of properties. So it was quite interesting that they did manage to sell quite a fair bit of units via this channel. Yeah, they basically accelerated their launch because of the lockdown. Okay, the last probably most powerful part of technology application is an ecosystem, member-based. Okay, what this means, in a member-based system, everybody can be a buyer and seller. Okay, there's no clear, of course, certain people play a stronger role in buyer or seller role, but essentially an ecosystem enable anyone and everyone to be a buyer and seller. Is connecting vast number of people, and the technology actually plays a back end or not so visible role. I mean, for example, all the shopping websites, you will realize if you look at shoes, then whenever you go on it, they'll show you shoes and more shoes, and you buy shoes, they'll show you even more shoes. So these are the back end of technology that is being used to shape buyer and seller behavior. Second, probably very big impact on this is actually the network effect, whereby it enables buyer and seller to provide feedback, whether live or post-sale, which helps in decision making. The last ambit, which is evolving in many different spaces, the tools that enable people to create their own product or run their own business, essentially. Okay, so this is actually a most powerful form of technology application, which unfortunately I don't think I've seen many being attempted in the property market. I think maybe CASA. Okay, so just an example, outside of property, you'll know the Apple ecosystem is so powerful that it sticks people to the network. I mean, those who have and are using Apple product, you know it's very difficult for you to switch to Android, Huawei, whatever, because of the ecosystem that is built, ranging from the app to the hardware to the charging cable and so forth. Okay, so another big ecosystem is Amazon. I picked this from the web. So people think of Amazon as just a shopping website, but this shows you they are into more than just shopping. They basically are about to conquer the world in every aspect. Similarly, Alibaba is on the same route, probably, or maybe more, even more powerful. Remember earlier I showed you the listing of Ant Financial. There's a minimum of 200 billion worth. That's part owned by Alibaba. They still got a lot up their sleeves. So you're buying stock. Okay, I cannot recommend stock, but this will be one thing to look at. Okay, the other big ecosystem evolving in Tesla is not just producing car. They're also doing tiles. They are this power wall, which should provide stock power for houses or people. He's also building a boring tunnel, which enable your Tesla cars to run underground at very, very high speed. And they are building spaceship to get people to Mars. So my personal take is everything that he's doing here is meant to sustain the journey or to sustain people in mass. Okay, so the question I want to pose for the audience is, I haven't seen people trying to create an ecosystem for real estate. How should we do that? Because compared with many other sectors of the industry, of the economy, real estate is probably in many ways the most paper-based, the most costly in terms of transaction and discovery. So what can we do to advance our real estate practice to make things faster, better, cheaper for everyone? Okay, that's what I have.
Panelists raises more questions than answers. So which is interesting, and which also informs us of the state of affairs right now, right? A lot of it, I guess, from what I see, it's that we are at this crossroads where we're trying to understand behavior as well. And I guess, Getty, you are in co-assets, and part of it, I guess part of the movement is so multifaceted, so it's hard to cover everything. But perhaps we look at this small little aspect in terms of maybe democratization of real estate. It's a bulky asset, it's illiquid. And I think part of what co-assets is doing is trying to kind of inject liquidity into real estate, right? So that there will be more retail investors providing liquidity to real estate. So what is your take on that, about this, about, you know, making real estate more liquid? And are we going to see a bifurcation in real estate where there will be this segment of people investing in a particular asset, and then say the institutions investing in more, you know, the traditional brick and mortar? What do you think, Getty?
Well, I think first and foremost, my humble view is that the whole democratization has been around for some time. If you see, I mean, the people's, and I think this is really a demand of investors' appetite for that particular asset class. If you see things like the evolution of REIT in itself is a way for the retail investors to partake. And I think there are a lot of, I mean, I think with REIT, that really enables that. And if you were to take a step back between, say, fractional ownership, REIT, crowdfunding, they all serve the same purpose of breaking down to bite size for investors to get in on the game. I think when we first came up with this, there were two schools of thoughts. The one school of thought is that, yes, there are investors who want to invest and take advantage of the asset class called real estate. The other school of thought is this: these same group of people, the reason why they're interested to invest in real estate, mainly because, or more often than not, is because of leverage, which fractionalization or, you know, democratization or breaking down small pieces, unfortunately, don't really allow for that right now. So if you ask me, I think we see that trend going, but the counter pressure would be those investors must be of a certain, they must have certain amounts to invest. Some of them would like to use leverage. And of course, if you start having all these, then I'll say you have a bit a more robust product for investors to be, you know, to get on. But one thing we have also found is that right now, it is a growing movement, but education is, the onboarding, the whole KYC, the whole regulation is there to actually protect the retail investors. So if you compare that with, say, other forms of technology like social media, and we have seen a lot of this growth in these areas because really there is not much harm. Okay, yes, you can. Now you have POFMA, you know, but in the early days, I mean, you may search for something that you didn't intend to search for, and if then it pops up. But if you make an investment and investment go awry, there will be a lot of financial and legal consequences. So I think we need to take a step back and analyze the landscape, and then ask ourselves, I really like what Kok Kyung said about having an ecosystem. But having said that, I'm not sure how, at least I have not come to terms on how I envisage that happening. But these are some of the thoughts I have.
That's pretty interesting. I also think that do we want the ecosystem to be managed, or should it be organic? And it seems like for an ecosystem to flourish, the market power would shift, right? Which is what anti-competition people are kind of looking into. Amazon, all these big people that somehow these big companies that somehow had an ecosystem in place. So I think these are a few of the regulatory concerns that we will have to think about. Xiaoyong, what do you think? I mean, with this, cybersecurity would be very important, I would see, and so would the sharing of data, right? I do have some questions on the chat that is with regard to this. Farmingly posted this question, what can someone comment on the current level of cybersecurity? And is this trend going to be challenged, and how do we mitigate the risks? I guess with tokenization, with people are more concerned with are their data being protected, and are there like framework that will protect people, and how would one mitigate this risk? So perhaps Xiaoyong, you want to take a stab at this question?
Hi, thanks, Kiet Ying. I think your question is more like a PhD dissertation topic. I'll just tackle more in terms of the data security.
Yeah.
I can't say for the private sector, but certainly in the public sector, unfortunately in the past 2 or 3 years, there have been some incidents. So certainly the public sector has put in place to me, is a very, very restrictive framework in terms of the collection, management, and disposal of data. And there are many of these rules and regulations as a public sector employee that we will have to comply with, working together with our IT colleagues. There are two effects. One is in terms of the cost of protecting data. And it could actually increase quite substantially because of demand for encryption technology and protection measures. And the second effect is really it could have a negative effect of the utilization of data for analytics. Because this may also apply, I think, in the private sector, where some of the private sector companies do collect data, and a lot of these data are personal data, which are subject to PDPA. If you are required to protect, with a very high level of security, and people will be very conscious of it, and people will be very, in a sense, conservative and apprehensive when they think of using the data for business analysis or for KYC. So that could be some unintended effect of attention on cybersecurity. But I guess at the end of the day, we probably have to try to see how we balance the usefulness of data and also the security of the data. There is one question in the chat room, if I may just in a way pick it up and respond quickly. Essentially, the question is on the land registration and also the potential use of blockchain.
That's from Claire. Claire is our student.
Land title registration. I have to first put a disclaimer that I'm not the person in charge of the regulatory function in SLA, so I really can't speak on their behalf. But looking around, I think certainly blockchain technology is one that could be applicable, not just in terms of title registration, but in terms of the entire property conveyance, yeah, from the buyer seller and all the way, to get the financing in the TOP and so on and so forth. The thing is, the technology is there, although it's not entirely mature. I think the second factor is there are so many players in the entire property conveyance or in the entire property value chain. And good, since there are many players, then I think blockchain technology could, in a way, help to effect a more efficient kind of transaction. The issue is really with the culture. Because I think I mentioned just now, technology would potentially, in a way, disintermediate a lot of things, and a lot of people, their lunches would be eaten by technology. So in the whole chain of property transaction, I think we have lawyers, we have property agent, and if we were to bring the blockchain into play, I think there are certain apprehension among the players. I mean, we have the recent example of valuation being sort of disrupted by a certain company out there, and it created a hoo-ha. But I think it's a matter of time. It's a matter of time when we start to adopt technology for a sort of a more efficient way to do. I mean, we've seen farm to table now, and I believe there will be, seller directly to buyer, developer directly to buyer, and everything is done in the technological means. But I think we probably have to ask the expert Kok Keong and Getty, to comment on blockchain, especially Kok Keong, who has been quite familiar with the topic.
I'm just going to share one view on the blockchain, and I think I'll let the expert among us share his view. My humble view, I think, to Sao Yong's point on the adoption, my humble view is that I think it's probably less of culture, but more of business case. Because I think right now, the business case of it is not clear precisely because there's too many players, there's too many stakeholders. So who is going to pay for the adoption? And of course, we may say that it's the developer do it, but if the developer do it, and then who is going to maintain it, who is going to adopt it? So it also becomes an adoption issue. And I think the Clara or the person who asked the question poses a very interesting point on whether the using blockchain, a tokenization or putting it on the title on a blockchain would result to things like tokenization. I think Kok Keong will also be able to comment on this, but from our limited experience, the fractionalization and tokenization in itself comes under the MAS because it's the offering of security. At least now, I mean, in the early days, it wasn't really defined as security, but now it is. So the offering of a token is actually, especially for financial returns and rewards, is deemed as a financial product, which means to say that, yes, you may be able to fractionalize it by way of blockchain technology, but the offering, the selling, the resale of it, and the treatment of it, and who invests in it, starts crossing over to the funding, finance, and bit already. And I'll end here, and I'll let Kok Keong share his views.
Taking on to get this point on friction in business case, I think a lot of the resistance and adoption of technology lies with the law. Meaning, like you take the simple case of conveyancing of residential property now. Okay, from the point I sign the option till I take over the property, it takes 3 months minimum for a quite seemingly simple process of taking off the checkbox on whether the title is clear, taking out CPF funds. So, okay, inherent in that process is a lot of legacy issues in terms of requirements by the law, banking practices, in terms of valuation, in terms of documentation, So Getty is right, to get over this hurdle needs a very strong arm and visionary player, which will step on a lot of toes. A lot of people will lose their job, which probably wouldn't happen in the short term. But having said that, I think adopting technology, or people like to think of tokenization or blockchain as a be-all solution for anything complex. That is a fallacy, okay? Because at the end of the day, you got to look at what's the problem that you're trying to solve, and whether blockchain is the correct tool to use. Okay, in the case of real estate, my view is that for example, in some countries like Dubai and Sweden, they have started to move their strata title property onto a blockchain, strata title on the blockchain. Okay, the downstream impact on this is that, imagine as an owner, I can go to the chain and I can find out the original planning permit, what are the alterations made to the apartment, what are the payments made, taxes, all the legal transactions, these and all. And coupled with AI, it can give me a rating or clean sheet of whether the property is got issues or rated AA, triple B or whatever, right? So that potentially will be maybe 10, 20 years down the road, that could happen. So adopting on blockchain in that sense does help to facilitate and reduce costs and friction in transactions. Similarly, when you look at commercial buildings, right? When like recently PIL building is put up for sale, right? How many analysts are forced to run the cash flow to find out what's the price that they should recommend to the boss to pay, right? For those of us who have been in the industry long enough, yeah, we all can build very complex, very sexy Excel, or even use some software, right? But fundamentally, how many variables can change that outcome? Which boils down to, actually, my point is that in that space is where a combination of blockchain and artificial intelligence can play a very big role in reducing the inefficiency in this discovery process. Because ultimately, you compare all the analysts' cash flow, it is actually not that different. So probably adopting technology, applying technology in that space, be it blockchain, AI, or whatever you call it, would have a much more significant and meaningful impact on the industry. But it also means some of the people will be out of job, and not necessarily bad. People who are out of job, they can look for meaning in the work they do. That's my view.
With due respect, Getty mentioned about whether there's a business case or not. I think Kok Kyung had just pointed out that indeed there's a business case. If I'm not wrong, property transaction plus the construction industry is probably one of the most inefficient processes.
Wow, you start a war.
Not just in Singapore, but in many places of the world as well. So to me, truly, there is a business case. It's just that, like what Kok Kyung said, who is going to be the one in a way to start, in a sense, put all the or disrupt? To me, it's basically disrupting all the stakeholders in the whole chain, and then so that it can become as efficient as possible. I mean, today we take 3 months in a way to complete essentially a transaction, a property transaction. Why does it need 3 months? I mean, we used to be in a sense buying something from somewhere, with a lengthy period of time. But I think the disintermediation, which I keep on mentioning, which is real, and that has made things so much faster. The clock speed has changed. So the matter is, I agree that there are too many stakeholders, and the stakeholders are all, in a sense, self-preservation. The developer actually is all right. I mean, after all, he's making all the money. And the buyer doesn't want to pay the fee to the lawyer, don't want to pay the fee to the valuer, don't want to pay the fee to the bankers and property agent. So if everything can be done smoothly, through blockchain or through online, I think that will be wonderful to the whole market. And I agree with Kok Kyong that the artificial intelligence is important here to supplement the whole blockchain.
I think I agree with Sao Yong. What I'm just trying to say is there must be a business case, and I agree that there's probably a business case to deal with the inefficiencies. But I think when we take a step back and then let's ask ourselves, who's currently benefiting from the inefficiencies? Naturally, some stakeholders are having the shorter end of the stick. Some stakeholders are probably enjoying the status quo. So, and I think Kok Kyong probably sums it up. And I think, honestly, what Sao Yong and what I'm saying is probably the same thing, okay? But I think what Kok Kyong does is he sums up very aptly by saying, number one, it's a law. Number two, someone visionary. It's got to be prepared to step on people's toe. So, until someone like that comes along, then I think they can really innovate and energize the whole industry.
I have a different question related to all this, and it's related to the land registry, system and also blockchain. If we were to kind of not being able to know who the end buyers are in terms of their demographics and stuff, are we able to come up with better policies? I mean, these data actually are very important, right? I mean, when Kok Kyong showed that real list, and I had to tell you that all the dissertation students use that system, 20, well, how old is that, Kok Kyong?
20 years.
Yeah, and not only our dissertation students, researchers everywhere, I use it a lot. And then I know that, people in the economics department use it also. There's a great system and it gives us information, not enough because it's, the government holds back a lot of the information. If we want any information, more detailed information, then we have to go into the Min Law system, right? SLA system, but still not a whole lot of data on demographics. And these things help us, help economists to come up with better policy suggestions and stuff. But if we were, if we were to go down this route on blockchain tokenization, would that aspect be lost? Xiao Yong, what do you think?
There's also a question in the chat room.
Data.gov.
Yeah, say that how much more growth would there be in the geospatial data space? And then how much can it contribute to business and governance? And also the comment is that the data.gov and LTA data mall have been somewhat half-hearted even after a few years. Are government agencies still pushing for more data to be released publicly? By the way, I'm not a government spokesperson, so I have to keep on.
Disclaimer, we put a disclaimer in. This is your personal view.
Yeah. First of all, I am a champion and also advocate for open data. That's for sure. Data sharing. And I believe that more data to the market would help, in a sense, the market, including researchers, buyers, sellers, and everybody else, to function more efficiently, for transparency, be it in planning, be it in making decisions on property purchase or some other thing. I think the issue is, I think I mentioned just now, how open is open data, and how comfortable are people about their data being open. And increasingly we see, especially I think in the Europe, there has been a strong pushback from open data by putting in place very strict regimen on the protection of personal data. I don't think I need to go into details. So when the government, I think the government, which this part I can say for sure, is certainly going towards more open data. That's why you see the data.gov and also OneMap, where we release a lot of data. Now, whether we are half-hearted or not, I leave it to the user out there in a way, sort of a conclusion or judgment. And of course, suggestions are welcome. And we constantly look for data in a way to be released. But please also understand that the government is also comprising, more than 90 to 100 agencies, and different agencies have different function, and the way they collect data are also varied, the types of data. And a lot of data are collected by means of law, such as the land title registration. And how in a way to put all this data to the open part, not the non-confidential part, to the market is actually one big task that I think my colleagues in the government data office, in the Smart Nation and Digital Government Office are cracking their head. But certainly I can assure that the movement is to move towards more sharing of data and more use of data, especially in this digital age. But the point I want to, in a way, put forward to audience, which is also a point that I have mentioned several times when I went to give a talk, is that what you see as open data coming from the government is really just the tip of the iceberg. And you think there's a lot of data from the government, but there's even more data in the private sector.
Yep.
I'm not talking about the property sector. If I just talk about the consumer data from the three telcos and from Google. In fact, I think Google know all of us better than the government, right? And the same thing goes for Apple. The telco people know our movements. They know our preference. They know our behavior, right? And the app, those apps that we use, such as Facebook and some other shopping apps, they have a lot of data. So whatever the government have is really the tip of the iceberg, but really the big treasure trove is out there. The issue is how are we in a way to bring forward some of this data? They could also, in a sense, be very useful for researcher or for analysts to look at, to understand the consumer behavior, to understand people behavior, and so that all the businesses as well as even the policymaker can rely upon them to make decisions. So that is still a big question. We will not see the private data being shared among the competitors, that's for sure. Procter & Gamble and OGV and Matter, they're all in a way loggerhead, right? They won't share their data.
I think that OneMap or GeoWorks really did a good job. I have to say that that really transformed the way that we carry out research, transformed the way we look at the landscape, think about questions. Claire also echoed this view. I think OneMap really transform and bring about data in the geospatial sense very well. Let's change the tone a little bit. There's this lighthearted question to Kok Yeong. What is the key difference between CASA and fund places?
Business secret. Okay. Okay. I think when we started fund places, it was much learning from Getty about democratizing and breaking down real estate investment into smaller bite-sized amount so that more people can take part in products that were traditionally only available in the private banking space, meaning like loans to developers in Australia and UK. Those typically can give between 10 to 20% annual return. If you pick the correct one, it is actually very good for your pockets. So fund places went that route, and then we saw tokenization as a means to reduce paperwork. So in July 2017, we were actually the first platform to issue, by now deemed to be security tokens, for people to buy and trade. Okay, so unfortunately, till in 2017, MAS and every other government start to clamp down crypto. We were not a crypto, but they don't distinguish. So we had to change direction and so forth. Okay, so that was fund places, which was the intent to let people invest small amount into alternate real estate products. Okay, in time to come, I think this would be very great product to fund even public housing, public infrastructure. Once regulators and the people become, or professionals become more conversant with the process of tokenization. Okay, CASA as a, based on what I can disclose publicly, CASA is a company that originated in Korea. They have some of the largest banks like Hana Bank and Korean Development Bank as their partner and shareholder. What CASA Korea is doing is that they are tokenizing commercial buildings in Seoul, Korea, to sell to retail investors in Korea. Okay, so they are in their regulatory sandbox. The platform is due to launch somewhere in August. Okay, it will be quite a game changer for that market because unlike Singapore, they do not have an active REIT market. The investors there typically doesn't have much choice when it comes to investment product. So in Korea, that product is deemed to be a great game changer for the investor landscape. Okay, and why are they coming to Singapore? Okay, we are in the midst of applying for an exchange license, meaning we intend to list token on the exchange, named CASA Exchange. Okay, this exchange will enable any, theoretically, anybody who pass our KYC AML process to list the property on the exchange. Okay, then what's the difference between that and a REIT? I think the key difference is we will generally only allow single asset token. Okay, meaning when you buy a token, you know exactly the building that you're buying. And it kind of removes the kind of complex structure in a REIT, which in last 1.5 years has run into some issues with corporate governance. So it offers alternative to people who want control over their portfolio. And if you look at it wider, how this can change the game is actually, say for example, a building owner, he come to me, it's a 20 million worth of building. Traditional buyer will go and try to get a bank loan at 50%, 60%, and then pay the 40% in equity, right? But on a platform like this, I can raise both debt and equity at the same time. And I don't need a bank, right? Plus a lot of possibility on a platform like this. So that's, okay, and if you look at the tagline of CASA, it's actually world's asset. So we intend to look beyond real estate in time to come. Because generally, what is real estate? Real estate is an asset that has monetary attribute that you can make returns from. Okay, these characteristics can be applied to a lot of things. Okay, I can't tell you too much at the moment, but it's wider than real estate, but we are starting with real estate. So to answer the question directly, actually, CASA would complement what FundBases has been doing. And it was quite a funny conversation I had with the founder of CASA. They told me they started CASA Korea because they read about FundBases in 2017.
I think I have a question from Claire again. It's a very long question. So Claire, I hope that I'm able to paraphrase it correctly. But I think that she's interested in figuring out how digital tokens as securities will be categorized under the balance sheet. So it's like a accounting question. And there is a risk where if it's too complicated, then you know, the public will be shrouded. I mean, you know, your shareholders, I would say, need not be the public, will be shrouded from, you know, the net capital structure, and there might be fraudulent practices coming from the company itself. What do you think on that?
Fundamentally, fraud or bad practices happen not because of technology. Okay, it can happen in your paper base. So you know, if you scan the current capital market landscape, there's this thing called perpetual security. That's something I won't touch because it's like a never-ending loan, non-redeemable. So how will you get your money back, right? In reference to the question, okay, token is just a means to represent your ownership in the underlying security. Okay, it doesn't replace the security. So at the end of the day, when you want to evaluate token, you need to understand the underlying rights and obligations of the underlying instrument. It can be a loan, it can be a security, it can be equity, it can be preference share, convertible bond, you name it, okay? So token is a layer up that represents the economic benefits of these instruments, okay? So token by itself doesn't promote or enable fraud. Fraud happens at the structure of the instrument itself, okay? And about explaining all this structure to investors. I mean, sadly, a lot of investors don't really bother to read prospectus. I mean, sadly, even for the high flux case, if the investors have bothered to read the prospectus in detail, they would not have put their money in. Okay, I'm not allowed to comment on securities publicly, but that's all I can comment in that case.
In the real estate sector, we have yet to see some kind of ecosystem tech like Alibaba and Amazon. Why is that so? Is it because the real estate sector in Singapore and for the matter in the world is just too balkanized? There are just too many stakeholders, so much so that there is no one who could in a way bring sort of the value, you know, to aggregate or to synergize the value together. That's one question. And the second question is then the follow-up question to say that then what would be the kind of environment or situation that would be conducive to see such a change?
I think if I can circle back to a point that I think Kok Yong mentioned earlier, he did say it's highly regulated. So it is, I think, a lot of these that are established precedents. And once you have law, the variance from the established precedents becomes very challenging. Now, let me not talk about the real estate, but let me comment more about the tech side of things. If you see tech, when Google, when Alibaba first came out, they were in an environment where there is no regulations. And it is really a very green field or blue ocean, if you like. Buying and selling of products is, you know, well, I would say not regulated, but you know, if you're buying trinkets, you know, buying and selling, it's a regular commerce. So of course, there are some regulations in those areas to protect consumers, but by and large, trade, commerce, the government has very light touch in those areas. Okay, and it's just about moving that. And if you talk about social media, things like Instagram, there's almost hardly any regulation. Of course, you know, you have things like censorship and so on and so forth. But apart from that, you know, social media, hardly anything. And if you, that's one end of the spectrum where there's almost no regulation, to the end, which is finance, which is extremely regulated. You know, I would say real estate is probably, you know, quite close to that, you know, because of all the precedents and, you know, statutes that have been built up over the years. So I would say, that's why personally, and of course maybe Kessler could be the next innovative unicorn, but personally, I struggle with that because unless we are saying that, we can reset the whole rules and regulations, if not, it's not going to be easy because there are a lot of entrenched stakeholders who, not because of self-serving reasons, but it has worked well. It has a certain level of transparency. So I would see any changes in those areas be a bit more gradual. Whereas at the other end, when there's no regulation, blockchain for a short period of time was kind of like that. When everyone say, hey, it's just a token, it's just a contract, everyone can just offer, and why that took off very quickly, but then regulations came in very quickly after that as well, is because when you offer a token, it's not a financial product, which means to say, if I ask investors to invest this token that is not regulated, technically it's not a financial product, it is outside of the finance ambit. But government has closed that loophole since then. Not just our government, but SEC, the governments around the world have closed that loophole, and the opportunity is gone. At least from our reading of it. Yeah.
In Singapore, we probably have the best instrument to create an ecosystem. Our HDB estate. In the BTO new estate, ask ourselves, why do we need to issue it's a long list to the people in paper format, right? Maybe HDB can spearhead this in collaboration with private sector to move the lease or title on the blockchain right from handover, and renovation, bank loan can follow through because bulk of HDB buyer also take loans from HDB. So in a way, that can kickstart tokenization or moving things on the blockchain. In the private sector, I think the greatest inhibition still remains the legacy land laws, because unless government move some of the compelling law that require paper-based documents, it's very difficult to change. Just example, even starting a company now, right? Although Singapore has an online, supposedly I can start it within 2-3 days, but they still require quite a bit of proof of ID and so forth. So it's part legacy. The second biggest hurdle the blockchain and token economy face right now is the lack of understanding and lack of professional circular or practice in this area. Okay, example, when we started Fund Places, when we wanted to do token, we practically met almost every top 10 law firm in Singapore. Nobody can tell me how to do it. So me and my business partner basically had to draw out the legal structure, and we eventually found a lawyer who would sit down with us and explore how we can navigate that within the existing law. Secondly, even in terms of accounting practices, it has improved. They now have a way to treat token in an appropriate manner in the books. Previously, all the big four didn't know how to account for tokens. So to answer Xiaoyong's question, actually, for big scale token ecosystem to take effect, the government has to lead the way, and it needs to be supplemented by task force from the various professionals. If you are talking about real estate, I think getting the lawyer, even the building professionals and accountants involved will be important. And I do think we have the means to basically execute the first token project via our HDB.
We have to wrap up our session today. And Kok Kyung, thank you so much for the insight. I think that our panelists today, Gaddy, Xiaoyong, this is like the most fun session ever. Everybody's interactive, asking questions freely. I think you have really enraptured our audience. I'll ask everybody to give a view on your comments on, what the future landscape is like for the employability of real estate grads.
I'm dying to answer these questions because I believe your Young Leaders series have a lot of participants from from your students, and I have been I have been very fortunate to be able to contribute my professional service to NUS Real Estate Department for 16 good years, and I have a lot of experience interacting with students. So 16 years ago, I probably would have told them, or 20 years ago, I probably told them that, oh, you need to know more about real estate finance. And I think today, if I were to advise them, I would say that, look, you can't run away from technology nowadays. I'm speaking from a person with geospatial expertise nowadays, is that the location technology is really on the rise. And especially in the sector such as real estate, where location is very important, unless the COVID-19 changed the whole consumer behavior and there's a shift in demand, we will still need to understand a lot about location data. And that is something that if you come out from school armed with some GIS knowledge, I'm not selling Koyo, but it's true because we have seen a lot of specialization in GIS that are used in a sense to help help real estate consultants using geospatial to do quite a bit of analysis. In fact, I think this part, I think in Singapore is a bit slower, but in the US and UK, all the real estate consultancy, they do have a geospatial department, such as Knight Frank. And so they do a lot of real estate data analysis using geospatial software. The other thing is that it will be good for some of the future graduates to get a hand in some programming language, simple ones, maybe such as Python and R, which I'm also learning. These are the necessary skills that now I will advise my students to pick it up. But maybe 20 years later, there will be something else different, perhaps artificial intelligence or something like that. Okay, two things. Learn your GIS software and go and learn some programming language like Python and R. Your bosses will be asking you for that. Thank you.
Okay, so I think as a private sector person, okay, as an entrepreneur, I would say I think I have two comments. One is to add on to what Sao Yong said. I think right now some of you might be saying GIS, you really can't see the business case, but let me tell you, I think there is, and I would say that if you put your mind a bit broader, it's actually really beyond just real estate. It is really about space management. Okay, GIS is really about space management. You're talking about logistics. You're talking about, and I think that in itself opens a big. You're talking about transportation, because through that you're talking about space management. And I think if you see the whole initiatives of, I think for a period of time there was self-driving cars. If you see a period of time there was drones. All these leverage on the backbone of GIS. Now, if you say that, if you think that as graduates, you are going to be you're going to come out, do real estate finance, work in the real estate agency, please, by all means, carry on. But then I'm saying you're probably selling yourself short. That was probably a booming market several years ago. What brought us here is not going to get us to where we want to be, or where, Singapore is going to be. So, and that's why when Sao Yong says that, it really resonates with me, because that is really going to be a very big and booming space. Right now, there is no established practices except for what, yes, there are established standards and practices from the regulatory government, but comes the private sector set of things, I think it's really a green field. So, I think there's really a lot of potential there. And then, and the other thing I want to say is probably if you still want to go back to the fairly traditional type of real estate, then I would say look around Southeast Asia. I think that continues to be a market. Of course, you know, with COVID, traveling becomes a problem, but I think we need to recognize the market size of Singapore is just too small. We need to be outward looking, and given our connectivity, given our level of education, the experiences that we have, the people that we work with, and I think if you go and venture, okay, after a few years of experience, you know, outside of Singapore, and that's really where you can make the most bang for a buck. And with that, you know, I wish everyone, all the students at least, good luck.
Thank you, Gary. And Kokyo?
Okay, by now the student probably wonder, why am I doing in studying real estate in NUS, right? Okay, I think the way to fight technology, or is not really to fight, but you need to learn technology like Xiaoyong is saying. It need not be in GIS or anything. So for a student to succeed in, at least in my, if you were to join my company, the three things that is important to me, you need to learn the whys of things, why things happen, and able to solve the why for me. Okay, that's something machine would kind of be a bit more difficult to displace you. It can be any task. Okay, so that's why you are studying. You are trying to understand the why of how valuation work, the why of land law, and so forth, so that when you start working, you can apply and find a better way to address the why. Okay. The second big thing I always tell my interns who I take on is, actually our school system doesn't teach us one very important thing in work life, which is to learn to fail and learn to take risks. Okay, we all study 20 years, all we know is we need to do my time, do 10-year series until you don't know every question, right? But actually learning to recover from losses, mistakes are very important attributes in work life that is missing in the younger people. I mean, during my and Xiaoyong's time, Xiaoyong probably scold me for something that I did wrong. We just go back, redo, and then try again, right? Because during our school days, there isn't participation prize for anything. Okay, now wherever you join, you get a participation medal, participation trophy, which is very damaging to you as young adults. And in work life, there is no participation medal, especially you do a business, right? You fail, there's no consolation prize. Okay, so learn to fail and pick yourself up and move on. Okay, third, very important point, as a fresh grad or even now while you're studying, learn about yourself, learn about what really matters to you. If you want to chase money, find the best way to chase money. Don't be shy about it. Okay, that is you. You don't have to apologize for it. But then some of you might be more geared towards fulfilling a mission, a legacy in your industry. Very good example is the 4 teammates I have at Fund Places. We went through 5 years without pay increase, without long holidays, without the whole works. But they went through it because solely they were driven by the mission to make a statement in the real estate industry. So the point that I'm making here is you got to learn about what you treasure most and gear yourself towards that direction. Don't need to apologize.
This has been an awesome panelist. Thank you so much, Gokyeong, Gaddy, and Xiaoyong, and hope to see you guys again. We will definitely be connecting with the industry more so than we used to do. So yes, thank you so much for taking the time to speak to our students, to the public. Thank you very much.